Can the euro collapse? It's a question that surfaces during every crisis. Can the world's second largest reserve currency actually collapse? The short answer, it's highly unlikely given the strong political and economic commitment to preserving it. But the pressures on the euro are very real. For forex traders, understanding these pressures is the key to navigating volatility and finding opportunity. First, economic divergence. The eurozone isn't one economy, it's many. When countries like Germany grow while others struggle with debt, it creates internal stress. Traders watch important economic indicators such as GDP, unemployment rates, and manufacturing data like the PMI from major countries to understand the overall economic pressure. This is easiest to see in bond markets. Traders compare the difference in borrowing costs, called the spread, between a stable country like Germany and a more indebted one like Italy. When this spread gets wider, it shows increasing financial stress. Second, the European Central Bank's delicate balancing act. It has to set one single interest rate for the entire bloc. A decision to fight inflation in one region could stifle much-needed growth in another. This makes every ECB meeting a major market-moving event. Traders listen closely to the ECB's tone. Are they hawkish, meaning they're ready to raise rates to fight inflation, or dovish, signaling a focus on stimulating growth, even if it means higher inflation? Third, geopolitics. Events on Europe's borders, energy supply shocks, and political instability within member states can cause a rapid flight to safety. During uncertain times, investors often move their money out of the euro and into safer currencies like the US dollar or Swiss franc. This shift causes the euro's value to fall. A fourth source of pressure is the lingering impact on the sovereign debt crisis. The memory of 2012 still looms large, reminding traders that the system remains vulnerable. Countries with high debt are particularly affected when the ECB raises interest rates. Higher rates increase their borrowing costs, which raises concerns about their ability to manage debt and maintain financial stability. So what's the playbook? It starts with fundamentals. Track core inflation, CPI, growth figures, GDP, and business activity reports, PMI, to build a picture of the economic health. Next, assess market sentiment by monitoring geopolitical news for sudden changes in risk appetite. Also, track bond spreads closely. They serve as real-time signals of fear or confidence within the eurozone. Finally, let technical analysis guide your decisions. Identify key support and resistance levels on your charts. These critical zones are where buyers and sellers compete, offering clear signals for when to enter or exit trades. While collapse makes for a dramatic headline, the real story for traders is volatility. These underlying pressures often trigger predictable market reactions, creating actionable opportunities in pairs like Euro-USD, Euro-JPY, and Euro-GBP. To trade the euro effectively, you need a broker you can trust. FXGT.com offers the tools, analysis, and execution speed to turn global events into your next trade. Join us today.
FXGT.com. Trade your way, experience the difference.